Back again. Welcome, welcome to our first video. I'm recording. I'm not gonna lie. I'm recording this a second time because the first one I was playing music in the back and these fools were tripping on me, so I had to record it again. But anyways, today I didn't. I personally did not trade, but I am gonna recap what I would have taken because I did go to work at 9 in the morning, and this is all Pacific Standard Time, of course. So, 6 in the morning, 6:30 market open, 6:30 a.m. for me, and then 9:30 a.m. Eastern Standard Time for the people on the East Coast. So, anyways, I woke up today 7:30. My rule is skip New York AM session until I can figure out what the trend is for the day. So from 6:30 to 7:30, I don't trade. I mean, sorry, from 6:30 to 8 o'clock, I don't trade until I can see what the real trend is. And obviously, this thing was crazy. Market open 1,687 points within. Here 6:45 to what is that 7? Till 7:15. In the span of 30 minutes, the market pumped up 1,600 points. Crazy, bro. Crazy. So anyway, amongst the chaos, this is what I would have looked for if I didn't go to work. So at first I thought it was just gonna be all crazy the entire day, but it really wasn't. So, I'm kinda bummed out. So this is what I would have taken. Looking back here, I would have hopped on the charts and starting off, I would be looking somewhere. First, I would have looked around here. Okay, because this is the first sign of this fair value gap. This is the first fair value gap after New York AM session open that we get. So I would let the market do its thing, and seeing this, right, I would have honestly looked for longs, but there was one thing that would have stopped me from looking at longs, and it's these two wicks right there. Those two wicks right there alone, right? So this is the fair value gap we're looking at, right? So that fair value gap is what we're looking at. Okay, let's take the indicator off so you guys could see. So using this fair value gap. Now, we all know that fair value gaps are orders waiting to be filled. Okay. Now, seeing these two wicks, right? If I would have been watching price and I would have seen a wick into the fair value gap, come back down, close below, way below the fair value gap down here, and then pump back up just to wick, fill more orders, come back down, and then fill it completely, I wouldn't have taken this like I normally would because those things are what are stopping me from wanting to take that trade. So again, stop loss 25 points. It looks tiny here, but it's because we're on a bigger time. We're on a smaller time frame. So, right, obviously we would have looked for something to target, right? Like maybe some DOL above. No way I was targeting that bullshit. So I would have honestly tried to go for like a solid 3-1, which I probably could have hit, but I wouldn't have taken it because it's not enough confirmation for me. For me, my confirmation is right. Confirmation for me is on inverses. We're trading continuation models. So I would have looked for DOL sweep plus, I don't know what the plus is. DOL sweep plus IFVG plus close below or above, depending on whether we're taking. Damn, I gotta cut that out. Depends on if we're taking shorts or longs. I would have looked for a close below or above the fair value gap, and then I would have looked to see um, price either short or pump if I was taking either shorts or longs. So I need the DOL sweep, I need the IFVG, I need the close below or above the fair value gap, and then I need price to shoot to either, if I'm looking for longs to either really pump, or if I'm looking for shorts, I need it to dump. And I need to see a lot of selling pressure, or i.e. A lot of buying pressure. So DOL sweep plus IFVG plus goes close below or above fair value gap, and for price to show selling pressure or buying pressure. Price to show strong pressure. I cannot spell, bro. Like, what the So, right, I wouldn't have taken this because I don't have my I don't have my confirmations. These two wicks are showing me not good enough confirmation. So I would have not taken that and I would have waited for something else. So let's take this out and then let's go ahead and put our indicator back up so you can see. So going back up, our next best option would have been this. And this would have been the trade for the day for me for sure. Here, this bearish fair value gap right here would have been my trade of the day. And I'm going to show you why. So we know that the trend is bullish for sure. We have that. We have trend. Oh, I forgot to put that. I'm like, bro, I knew I was missing something. Trend plus DOL sweep plus IFVG and so on and so forth. So this is the trade that I would have taken. Okay, we know the trend is bullish. We know that price came back down. So now we're getting ready for it to come back up, especially with news, with the tariff news that just came out. Guys, if you guys are not watching news or at least have the Bloomberg app or have any kind of economic news open, then you're really messing up because you have no idea what's going on in the market. So you need to have an idea of what's going on in the market. So keep up with what's going on. Don't just have Forex Factory and don't just have you know what I mean, your stuff open and seeing what the news is for the day. It's not just the news for the day. You need to understand what's going on, right? So everything going on with Trump and the other countries that are getting slapped in their face, it gives you a good idea of what's going to happen with the market. So I'm not going to go too deep with news and all that, but I had a good feeling that this was going to continue going. And then seeing the orders get filled, seeing this big ass buying pressure, it told me everything that I needed. The market could still dump long term, but for the day, the trend was absolutely bullish. Okay. So my next trade, what I would have been looking for is shorts here. The reason being is you see this big wick right here? This big whip would have pretty much taken out my profits. It would have hit my TP 100%. And I'm going to show you how. Okay. Now, I know I told you about wicks and it not filling, but at that time, when you're in this trade, right, you're not seeing, you don't know that it's going to wick. You're just seeing a lot of buying pressure, which is my confirmation. Now, let me show you how this could have benefited you. So we have this for the gap, right? And this is very good, right? It's a full candle. I mean, the wicks are kind of big, but that's given in this kind of market, the volatility in this market. So I would have taken longs right here, and I'm gonna show you why. So we had the trend. The trend is obviously bullish. We had selling pressure come back down, right, to even it out. And then we know it's going to continue to pump. We know it's going to continue to go back up. Okay, so trend plus DOL sweep. Okay, so we swept DOL. Remember, all the way up here, we swept DOL. We swept New York PM, New York lunch, and New York AM. Right, so all these levels all got swept. So we know that we don't have any more DOL above. But we know that it got taken out. It came back down, and we know that price is going to continue to just pump up from this low level that tapped down here. This is the lowest low. This is the low of the session, right? So we have higher highs, higher lows, higher highs, higher lows, right? So this is the higher low of the session, if I said it incorrectly previously. So this is what I would have looked for next, okay? We don't have any wicks right here going into this fair value gap. We have singular buying pressure, right? Which is fine. If we see a body candle going into the fair value gap, that's still good. But if it's just wick after wick after wick and the body of the candles are below the fair value gap, it's not valid, right? It's not enough confirmation, right? The only way we take this is if it's an A+ setup. If it's not an A+ setup, you don't take it, right? So if there was body candles going into the FVG, that's fine. That's totally fine. But if it's just wicks going into the FVG, again, not okay. So if we replay, this is what I would have taken. Boom. This big ass wick is what we would have taken. Now, granted, we wouldn't have known that it was a big ass wick at that time, but we would have gotten our TP taken out. And I'm going to tell you why. After all the confirmation that I have, I would have entered longs, right? 25 point stop loss, whatever, protect that's 25. And then we would have looked to take out New York lunch right here, right? So let's pretend we have this marked out. We replay. See how we have New York lunch at the top? That's what we would have targeted going into this FEG. Now, it doesn't look like much when it looks like that, but when you see how many points that is, that's 100 points, right? That's a Fix this stupid stuff. Whatever. That's a 4-1, right? 100 points is a 4-1, and we're taking that all day. 4-1 is beautiful. Sure, you could have gotten 50 points, but who would have known that? You know what I mean? We're targeting DOL. That's what your TP should be at. Your TP should be at DOL. So I would have been a good 4-2-1 trade, and that would have taken me out for the day. I would have been done for the day for sure. So this is what the trade of the day would have looked like. Simple. Okay, we would have been done by what, 10 o'clock? Yeah, we would have been done by 10 o'clock, 10:05. So yeah, that's a good chart recap for the day. I didn't take any trades. I was at work. I haven't figured this whole thing out just yet, but I will. But yeah, come back tomorrow. Hopefully I see something tomorrow. Hopefully I have the time to take it, and hopefully I can show you guys. So stay tuned. This is the start of many. Lights.